All right, I'm Mike Fritzel. Today I'm going to be talking to a guy called Philo. He runs a newsletter called Philoinvestor, which has been on Substack for many years and now on Ghost. I think you're based in Cyprus, right?
Yes, I am. Hi,
Cool,
Michael. How are you?
good. Let's talk about your background. Tell us about your career. I think you used to be, was it on the buy side before? And what are you doing today?
So I see myself as an investor and market participant. Some 2 decades now. Started out with equities, fundamental research, then layered on my approach, macro, big picture macro, geopolitics, expanded from fundamentals to technicals, and kind of learned from everyone to create my own process basically. And as time goes by, experience increases, you layer some things on, you remove other things, and with time you conclude to your own process. It's still ever evolving, of course, but I would consider myself a value oriented business owner mindset investor, but also I take trades, I have strong views on macro, I follow it closely. I consider myself a generalist, an opportunist, and ultimately a liquidity provider.
What are typical trades for you? Are they short term, long term, or what kind of asset classes do you like to prefer focusing on?
So let's say on stocks, I may have a view about a certain company and I will just own it and follow it as it progresses, what happens, how the space changes, competition, and I will own it as far as I think that it's reasonable to do so. But at the same time, volatility allows you to execute and make quick returns, no matter how anti-investor that sounds, and make a lot of money just by trading around that. So I have a view about a company, bottom up. I have a view about a space or sector or theme top down, and I can trade around that.
Would you say that you have like a contrarian bent? Because when I read your research, it
Yeah.
sounds like you'd like to take these extreme, not extreme
Hmm.
necessarily, but very contrarian positions. You kind of
Yeah.
thrive on that. Is that
Yeah.
correct?
I'll tell you how I see it. I
Yeah.
think that someone who doesn't know me and know my work intimately, it would be the first thing they would say. This guy is a contrarian. From my point of view, coming up in investing, I wasn't afraid to call insanity when I saw it, or fade a whole theme, no matter what everyone said about it. Real estate bubble, subprime, banking, Europe, crypto, AI, whatever. I wasn't afraid to go against it. And I think that's kind of more ingrained in my style as an investor. When I see something that I have a contrarian view on, I will obviously dig deeper, scratch the surface, assess what I am missing, if I am missing something, and then what the market is missing. And I will not be afraid to just say bluntly that I have an opposite view. Um, and yes, reading my work, that kind of shows.
I'm super interested in your views on technical analysis. For me, as a
Hmm.
fundamental investor,
Yeah.
my research is completely fundamental based, and I would love to have some kind of overlay
Hmm.
or add that to my toolbox somehow. So, if you were to give me advice, like what would you say I should do in terms of technical analysis to make better decisions of when to buy and sell?
Wow. Great question. So I think specifically in value-oriented fundamental circles, there is discrimination. We could say that against technical analysis. Some people call it, what is it, astronomy for price charts or whatever, astrology rather. Um, Technical analysis can give you a view of what the market is saying, what the market is doing. So very simple tip. Is the market trending? Is the market going sideways with no direction? That is to say, in a range, or is the market trending down? This simple concept, which you can get obviously in 10 seconds looking at a price chart, whether general market or a specific stock, currency, commodity, you know what's happening. Am I buying? Gone.
Yeah. How do you know whether a price series is in a downtrend or uptrend? Are you looking at averages, or is it more like higher highs, lower lows?
So let's talk about the daily time frame, because obviously there's higher time frames, lower. If the daily chart is moving down for weeks and months on end, and I don't want to be too strict with the criteria here, there's always, you know, a margin there. If it's moving down, it's moving down. If it's moving up, it's moving up. And of course, you can zoom out, zoom in. If it's sideways in a range, then you could say sellers come in at $12 and buyers come in at $10. So that chart shows the range is between $10 and $12. If something is moving down, it hit 15, now it's at 11, 10, $9, and you can see the trend is down, and vice versa when it's moving up. So let's say you want to buy something, okay? And it went from $15 to $8. Why did it do that? In your research, you can see that the business is thriving. It's doing well. Revenue is going up. Margins are stable to going up. And when you start to ask those questions, you get answers. Oh, the sector is in a downturn and people are going negative. So-and-so bank wrote a negative report and put it on sell. This country has issues, management has issues. And those questions give you answers, and those answers get you closer to the quote unquote truth about that market. So that's one easy way of using technical analysis without even getting into moving averages and technical formations.
Yeah. Okay. And if your view that a market is trending, or let's say like is in a range bound, and then there's a break, would you act on it forcefully? Like when you
Well,
see that break happens early on,
it,
or do
it,
you not do breakouts at all?
no, I love breakouts. They tell you a lot, but it always depends. Was there an event that caused that breakout? Was that breakout or breakdown, that is to say up or down, was it so violent that there could be a snapback? So if I buy oil at 110, could it be at 90 in a few days? If you want to go so specific about buying or selling, you have to layer on risk reward.
Right.
So where am I buying? What's my target?
Let's
You,
take an
you were going to
interesting
say something.
current example. Like
Yeah.
we of course this is not investment advice. We're just rambling here. But let's talk about memory stocks. We had
Yeah.
a pretty tough day, I think, yesterday
Hmm.
in the S&P 500 and
Not me.
Nasdaq. Not
Not
you.
me.
That's correct. If they read your report, if you read your article on DRAM, but was that, would you say, is that technically interesting, that kind of sharp
Yeah.
decline after a very bullish period, I would say. I mean, for half a year now at least.
Yeah, we could say it's technically interesting from the point of view that memory under the broader AI cycle, memory and semis went parabolic. So these rallies in stocks like Micron Technology and the Korean memory giants, of course, affecting the Korean index Kospi, they went parabolic. And there is an axiom or a quote that says narrative follows price rather than price follows the narrative. So an ascending price changes the story around that market, and a descending price changes the story around that market in a bearish way. A few weeks ago, because memory was going up so violently, if you noticed, people started to say that memory is no longer cyclical because of AI. And that was one of the reasons why I wrote that article, No RAM, No Story. I took it from No Risk, No Story, because, in Korea, there is a very high retail participation in the stock market. I think 2/3 is owned by local Korean retail investors, which is great for them. But also, margins went up. People were buying on margin and taking loans from banks to buy memory. So apparently, people in Korea and around the world saw this trade as a cannot lose, because AI is a sure thing. We need more compute. We need more intelligence, and they equate the one with the other. And you cannot have more intelligence without memory. However, the devil is in the details. That's a very linear, first level thinking way of looking at things. I'll give you one simple counter argument. These memory giants are spending incredible amounts of money expanding their capacity, because
that's what's so interesting. I mean, if they make $500 billion in net profits in 2028, that's going to be reinvested into fabs. $500 billion of capex. I mean, if the estimates are true, which obviously they're too bullish. That's at least my view.
Before we even go to 2028, right now, Micron is telling you how much capex they're going to lay out in 26 and 27. Incredible capex. And, when you think about it, higher level thinking, you understand that us, the consumer who is paying for these chatbots, and obviously enterprise who is paying much more, right, on their token budgets, which have gone out of hand, we are funding this AI infrastructure. So how can it not be cyclical when, by definition, they're expanding capacity? And I explained in the piece, probably all this capacity will come in at a time where the models are more efficient, the semiconductors are more efficient in terms of using memory, and our use of it will become even more efficient. I think that's an efficiency layer that not many people talk about. And I'm rambling on.
It's hard. It's going to be hard to estimate the future supply and demand for tokens, though, right? I mean, we have to make a lot of assumptions about sizes of context windows and so on. How could we know? But would you say that you're talking more about the narratives that are floating around and potentially breaking holes in those narratives? Because obviously this is a cyclical industry, and you just leave it at that.
Yes, I am talking about narratives, and I'm also talking about reality on the ground. But more interestingly, I am talking about how those narratives affect reality.
Yep. Interesting.
Okay. Yeah.
And that's why we have a cycle. We will have a cycle yet again.
Yes. So, no, we cannot calculate demand supply on tokens, compute all these things. But if we cannot calculate it and predict it, then how can these companies? The stock market is linear. It has to price in things linearly. If it didn't, these companies will be much cheaper. So there would be a margin of safety relative to the future. But right now, as I said, the narrative is memory is no longer cyclical. And then Micron Technology, I think it was MU who did it first, a multi-year contract to sell memory. And then memory exploded from that point. It was maybe 5, 7, 8 sessions ago. And they gapped up, and they never stopped until obviously yesterday, Friday. So it was the narrative, memory is not cyclical. And then they started to sign long-term supply agreements. But it doesn't mean anything. It doesn't mean anything. Actually, it kind of vindicates a view that I had that big tech / AI is hoarding AI infrastructure, including memory. They are hoarding this infrastructure because of FOMO, because of, I don't want to miss out. I don't want to be caught short of supply. And more importantly, I don't want to be caught short of supply when the other guy, my competitor, has it. So as I've been saying for years on this AI cycle, it's not a profit oriented. It's not an ROI first cycle. It's existential for these companies. And this is why the market is how it is.
Right. So that's a broken parabola type of situation. Are there any other technically, interesting situations that you're following on a sector basis or a country basis? Mm-hmm. Anything else that you kind of stands out when it comes to the technicals? Any country or anything in your focus right now?
Oil is interesting.
Oil? Okay.
Yeah, it was moving sideways in a sort of triangle, obviously with the whole geopolitical thing evolving and what Donald is saying and how the US-Iran broader war is unfolding and who bombs who. Very interesting. I think energy-focused investors tend to fall for this trap. They always believe in the ultimate price increase in oil. I actually wrote a piece a few weeks ago after the Emirates left OPEC to touch on that important event for OPEC and the energy markets. And I gave 3 scenarios of how oil could unfold. So again, is what I said in the beginning. You have a fundamental view. In this case, it's not stock, it's macro on oil. And then you see how the market reacts. So the market broke down from this sideways triangle on the daily time frame. And now it's at 92. WTI is at $92 a barrel. If this war and conflict goes cold, you could see oil fade much more. But of course, it's not a very easy market to apply technicals right now because of how volatile it is. But still, you can see things. You can see that even with all the bullishness around oil and lack of supply, increase in demand, we have a lack of supply in power and all that. You can see oil was fading up until the Iran war unfolded. So I give this example to show that important events do change the technical picture and affect it. And when you're trying to read charts, it tells you things. Oh, it was weak, but this event happened, and now all of a sudden the market could be moving up. Would it be interesting for me to start a position or buy all stocks and so on? So that's one interesting thing.
Okay.
Oil.
All right. Okay. Let's talk about something more closer to this part of the world, Japan. Mm-hmm. The Japanese yen has obviously been affected by the US-Japan interest rate differential. US rates have been very high now for 4 years, and presumably that's causing carry trade flows out of Japan. The question is, though, that I wanted to ask you is, how much is the weakness that we're seeing in Japanese yen is due to continued carry trade flows, and will they only stop when the differential goes to zero, or is the exchange rate almost kind of linear with the actual interest rate differential? Or how should I think about the exchange rate? Do we have to assume that the differential goes away completely for the yen to strengthen, or how do you see the exchange rate going forward?
Mm-hmm. So I think that's a trap specifically for this time in dollar yen. I don't think the interest rate differential has to converge or shrink from here for flows to reverse, because I think the Takaichi administration is also an important dimension in this cycle. So I think the Japanese, whether retail investors or big institutions, have kind of had enough with how authorities are trashing the yen. And for context, Japan has been extreme Keynesian in terms of monetary policy and how they manage their affairs for decades. They have been the first Western country to use this playbook so extensively. I think the trap for people who are long dollar yen here is a change in the political environment, either against Takaichi and this style of managing currency, or if Takaichi herself starts to change her rhetoric around the yen. So Takaichi is dovish. Sorry, go on.
No, yeah, go ahead. Now, I wanted to ask you about Scott Bessent. I mean, what does he want to achieve?
I think the Americans with the Japanese have an understanding that they don't want the yen to fall too far because that would strengthen the dollar against the yen, and that's for trade flows. And I think that idea of the US-Japanese arrangement, that they do have a signed understanding, it affects how people look at FX. But if something were to happen and the forex market would gap 3% up or down because of an event, it wouldn't really, the arrangement between the US and Japan wouldn't really affect that, you know? So the event would take precedent over Besant and what he's saying.
Right. I suppose the big question is if there will be any big agreement, such as a Plus Accord 2.0, whereby big purchases of securities, one way or another, causes the yen to appreciate, or if a
No,
coordinated effort to make that happen.
I don't see it. I don't see it right now. I did take it into consideration, and with macro, you have to remain fluid because things change
Sure.
all the time. I don't see it right now. I think the yen would rally with more visibility from the Bank of Japan in hiking rates, and it is happening. It is happening. So the BOJ is also unwinding their zero interest rate policy. And also the JGB market, Japanese government bond market, is demanding it. So the Japanese 2-year is at 1.4 and the BOJ rate is at 0.75 right now, going to hike to 1 probably. I think the next session is next week.
So that's
So
a rate hike is priced into the 2-year, but not necessarily in the currency. Is that what you say?
no, not exactly. What I'm saying is the yen could appreciate with more visibility from the BOJ in hiking rates, even further than 1%. And where the yields are for JGBs just tells you that Japanese money says we're not going to park our money for 0, for 0.25, for zero point 0.5 anymore. We want more. Now, that is a problem for the Japanese Ministry of Finance. If you look at a chart of the 10-year JGB or the 2-year, you see how yields have rallied post-COVID, post-Ukraine war, and post rate hike cycle by the Fed, because the BOJ was saying, I'm not going to hike because of the Fed. I'm going to stay loose because inflation is not at 2%, and that whole inflation narrative, which is kind of ridiculous. And now Japanese bondholders have revolted and they're saying, I don't want to keep for X%, I want more. But it's kind of getting close where the JGBs could be an interesting trade to go long.
Would you go on the long end, or what tenor of JGBs would you buy?
I think when you're looking for torque and duration, and when the setup is good enough, I would buy 10-year JGBs because you can make more money on the move. It's not there yet. I would expect kind of a blow off top and then a response from the authorities, collective response, government, BOJ, MOF, to say something, and that will be the bottom in JGBs, the peak in yields.
Interesting. Now, I see
Mhm.
also in stocks that there's zero interest in importers or like local yen earners. People, Japanese fund managers, they don't want to touch these stocks. I think they've been into Nikkei exporters so far over the past few
Yeah,
years.
that's a top down way of looking at it. When you say Nikkei exporters, do you include
Well,
Japanese companies
I'm saying
that
like
are?
Nikkei is very export heavy. The companies
Yeah.
in that index, and that seems to be trading at a pretty high multiple. I
Mhm.
mean, they certainly run much more than small caps in Japan. At least that's my
No,
impression. And it's
I
trading
would
pretty high
say
multiple now.
do you include companies like fast retailing because they have
Yeah,
business
yeah,
outs?
yeah,
Okay.
exactly. So Fast Retailing is an amazing company, and they have a huge export business. I mean, they're
Hmm.
successful all over the globe.
Exactly. Um,
I read through your previous research, and I found one stock that would love to hear your view on.
mhm.
The company is Duolingo, and
Yeah,
I hope it's okay that I ask you. But
sure.
what do you think? What do you think about Duolingo now? Because there was one person who pitched it in Omaha, and it made a lot of sense to me, like the whole story,
Hmm.
and it would be a very contrarian approach. I think it would be a contrarian take to go long the stock right now after in midst of all these AI fears. But
Yeah.
what's your view?
I mean, I'm a Duolingo user before the IPO, so I have a good sense of the product and its value. I actually learned the language using Duolingo uh, to a good enough extent. I'm actually fluent, but not perfect in French.
French? Cool.
Yes. And then Duolingo was IPOing, and I just looked into it because of, I use the product. And I tried to teach that you cannot analyze and research all business models the same way. And here is where, the idea of value investing goes wrong. Um, Duolingo is a new economy business model. It's not a typical, textile mill, coffee shop, supermarket, shipping, oil and gas. It's not capital intensive. Its investments go through the income statement because they are expensed. Most of it R&D, marketing, etc., and that penalizes profits in the short term. So an investor would look at the surface of Duolingo and say, it's not making any money, it's never going to make any money, and all that. So that was the previous cycle when I bought Duolingo. I think it was March 22. And it rallied 5, 6 times. And then it became overvalued. And I wrote a follow up piece to say, the optionality that existed before is not there. I reduced my position, and then the AI layer started, and it sold off and crashed and crashed and crashed. And I bought back. I wrote a follow up piece to give my views of why AI cannot kill Duolingo. Actually, Duolingo is using AI. And there are some things that Duolingo has that AI cannot replicate: distribution, brand, massive ecosystem. Duolingo is already using AI. They have a great balance sheet, expanding value, and very, very cheap. So why would AI beat
Yeah. So
Duolingo?
what is the bear case? Like, to be very in very
Mhm.
practical terms, is it that users will open up the ChatGPT app and talk to to ChatGPT the same way as they would talk to or learn through the app. Is that the bear
That's
case?
one of the that's one of the bear cases, and I think it's ridiculous, to be honest, that someone serious about learning a language or music would use his chatbot to learn Japanese rather than pay either nothing or $10 or $13 a month to have Duolingo. I mean, do you think you could learn a language with ChatGPT?
The thing is, maybe you can, but I don't
Mm-hmm.
think people realize that even if they could. I think people are fairly simple-minded. They look for a solution, and if there's something that comes to mind, they will use that. And I think for most people, Duolingo is probably comes to mind most
That
easily.
applies too. That applies too, yeah, exactly. I mean, it is so convenient with zero friction to go from my French Duolingo to my German Duolingo or my Japanese Duolingo, play chess, play music, buy a family package, and have, every user will have his kids on. Every parent will have a family plan on Duolingo going forward. So
It's also the
AI,
it's also the gamification of the
yes,
language learning process. I don't think there is any kind of gamification on ChatGPT. I'm sure you can replicate the app somehow, but yeah.
the Duolingo brand, Duo is one of the layers of the moat. It's not the whole moat. Some people do think that it is. And I see a lot of people opining on the company that have never really used it, Oh, I tried to learn Spanish and I played on it for 2 weeks and I don't like it. No, it's part of the process. You have to wait it out and you will see how the words will stick. I mean, everybody can do their own research. I don't want to preach Duolingo here, but I am long Duolingo.
Interesting. Super interesting. So how's it been so far? I mean, you've moved your newsletter away from Substack. Curious to hear, just very quickly, why did you do that, and how's it been so far using Ghost?
It's been good using Ghost. I like the flexibility, the integrations. Substack was becoming kind of a closed ecosystem. I haven't said this or written about it. I didn't have time, but I wasn't happy with customer support and how the platform was evolving. To be honest, it felt like instead of them working for us, we were working for them. I guess that comes from a lot of success for a platform. Substack did raise money right from VC. I assume they're going to IPO. So things tend to change when that happens. They used to celebrate the small writers. I don't think they do anymore. So it was just a strategic move to free my newsletter myself and move to Ghost. For now, Ghost
Cool.
is fine.
You also have a few other services, right? Or is it a platform that you have, like a
The
trading
app,
platform?
yeah,
Well,
yeah,
yeah.
we're developing an app for traders. It's
Cool.
a trading journal with analytics, insights, planning a trade, following it through. You execute with interactive brokers, but then the data gets pulled in and matched automatically. And that all that data and analytics, you can review your performance, see what works, what doesn't. And I'm using it myself now that I'm testing it, and it works incredibly well. It's been very easy to cut loss-making types of trades or figure
You,
out why they're.
so the app will kind of figure out which mistakes you're making.
Yes, there is an automatic way of figuring out what doesn't work for you, but also manual tagging. You tag certain trades, and then all that gets worked into some logic. It's not AI, and it gives you analytics, insights, performance review. And I know what didn't work. My entry didn't work. Active management, looking at the screen. I traded too much. I bought a bigger position than I should. I didn't understand how volatile the stock was, and I got burned. My exit was wrong. And all these things, when you work on them iteratively, it helps you extend your edge. You become more profitable. So it's a year-long project. Started from my own work in trading, and I just decided to commercialize it.
Interesting. Okay. All right. How about Philoinvestor? I mean, you want to talk about what you do there? Your
Well,
newsletter.
yeah, because I consider myself an opportunist, I don't really have, for example, you are Asia focused, right?
Yep.
You concentrate in Asia. I could write about Forex, commodities, energy, Japanese macro, individual stocks. We have a dividend portfolio section. We write about companies from a skeptical point of view. We have a technical analysis focused newsletter where we review almost every market, currency, macro, government bonds, themes, specific stocks, just from a technical first perspective, and then layer on a small narrative to explain. And that has helped tremendously in catching trades in gold, silver, avoiding the sharp sell-offs in these precious metals. Silver was first days of the year, but also the sell-offs now. So generalist, opportunistic, kind of contrarian, as you say, cynical. It could be politics. It's a one-stop for someone who is following markets, big picture, but also likes to zoom in on specific setups and themes.
You get a view into your mind, essentially.
Exactly. That's a good way of putting it.
Cool. That's philoinvestor.com. Well, thank you so much for joining, and yeah, let's keep in touch. I'll put the in the show notes. I'll put the link to your social media account and also your website. And yeah, thank you so much for doing this.
Absolutely. Thank you so much. Great speaking to you. Keep in touch.
Yep.
Bye-bye.